Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell. We're here to help take us beyond the bell. It's a global simulcast with our friend Tim Stenovec. Welcome to our audiences across our Bloomberg platforms, television, radio, as well as those folks streaming on YouTube.
Hey. Carol's here too, I promise.
Hey.
She's here.
I hear like the
Jay,
disembodied voice of somebody, but
there she is.
wait, she gets her own box. Wow.
Wow. Really
the star of the show.
She was not stuck on New Jersey Transit. She was not at the American Dream Mall.
Well, I was solving climate change over at the Plaza with the Earthshot Prize and Bloomberg Philanthropies. You guid what'd you do to the Treasury market here, guys?
Yeah, blame it on Romaine.
I am going to blame it. Look at the 10-year.
This is that reassessment I think a lot of people are making right now about just how much further rates have to go. Remember, this isn't just about the Fed anymore. This goes beyond monetary policy. It's about economic conditions.
Well, we just had a guest on too, right, who says, wait, you look at what the 10-year yields and you look at what the S&P 500 with a yield of about 1.5%. Like you start to say, wait a minute, it makes increasingly more sense, Tim, to put money in the Treasury trade.
Yeah, and look, that was Charles Tan, the co-CIO over of Global Fixed Income at American Century Investments, Scarlett. But I have to tell you, there's also been a change in tone that I've noticed over the past couple of weeks, and especially today. Team Soft Landing has really seemed to be winning this, but this new note from Anna Wong over at Bloomberg Economics, there's a lot of pessimism out there right now.
Well, can I just on that point though? They also put out a note, her and one of her deputies, saying that the last 4 recessions have all been preceded by this drumbeat of soft landing.
That's what I'm saying.
Yeah, you saw the same thing.
Territory.
Yeah, interesting report. If you have a Bloomberg terminal, I definitely urge you to check it out. The data that they put, kind of sobering here, given how much we talk about, we might actually be out of the woods.
We're all inclined to believe that a soft landing is in the cards.
Yeah, absolutely here. On this Tuesday afternoon, market's still in a bit of a holding pattern. Fractional losses across the board, with the Dow down about 0.3%. The S&P and the NASDAQ each down about 0.2%, while the Russell 2000 is going to finish the day lower. Carol Massar, if you are actually there, down 0.4%.
I'm still hurting from that 3 box. Yeah. I'm just going to say, I'm a sensitive little gal. Hey, S&P 500, by the way, about 199 names to the upside, guys, 302 to the downside. So we definitely are seeing more of a negative tone, but, we're all kind of waiting for the Fed decision tomorrow.
Yeah, the negative tone is really reflected in the sector performances, too. If you pull up the 24 industry groups of the S&P 500, let's start on the decliners. Retailers off by 1.25%. You've got chip companies losing about 0.9%. Energy stocks down 0.8%, even though oil prices remain somewhat high at new 15-month highs. Keep in mind, energy was the best performer over the last 3 months. On the upside, those that are bucking the decline, insurance companies, autos, and tech hardware are each up by at least 0.5%.
All right, interesting. All right, so that's your big look at the markets, the big major industry groups. Enphase Energy, let's get to some of the individual gainers. It's number 1 in the S&P 500 and the NASDAQ 100 today. It's up about 4.2%. After the close yesterday, Newsat company director Thurman Rogers reported a series of insider stock transactions. He reported that to the SEC. It's about $4 million worth. Stock, keep in mind, is down about 10% over the past month. It's down more than 50% year to date. 8% of the float is shorted, but nonetheless, news of that insider buying certainly sending that one as a top gainer in today's trade. Also want to go to the cruise lines. Both Royal Caribbean and Carnival getting some upgrades. Royal Carib upgraded to buy. Carnival lifted to hold at Truist Securities. They are citing strong trends and cooled off stocks. So you had Royal Caribbean up about 2.5% in today's trade. And Carnival was up 3.6% at its highs, but finishing with about a 1/3% gain. And this is for you, Romaine. Rackspace Technology.
Yeah,
it's a small cap, about $425 million.
I love small cap.
I know you do. About 36% higher in today's trade. Notable move. This is after Raymond James did an upgrade. It's an infrastructure software company, upgrading to outperform from market performance, saying its turnaround plan is gaining traction. Price target set to a street high of $3.50, stock closing at about $2.
And we should just point out, too, of course, keep an eye on Instacart. Those shares, at one point, up 43% on the day.
Oh, I missed that one.
Closing right now. You did miss it, but that's okay. Up 12%.
That's what happens when you keep me out of the 4 box. I'm just telling you.
No Instacart.
Retribution.
Carol's got the gainers. I got the decliners. Let's take a look at what happened with Amazon today. Should note that higher bond yields hitting tech shares. We saw the mega caps all move lower today. Many of them, Microsoft, NVIDIA, via Alphabet. Amazon among the worst performers on a points basis, the worst performer in the S&P 500 on a points basis, finishing the day down by 1.6%. The company did say a little later in the session that it would hire 250,000 employees this holiday shopping season. It's going to boost average pay for those logistics personnel to about $20.50 an hour. The company is still dealing with attracting and retaining talent in this environment. Let's also take a look at shares of Walt Disney. Early this morning in a filing, shares have been down all day. It finished the day down 3.6%. Early this morning in a filing, the company coming out and saying that it's going to nearly double its investment in parks and resorts to $60 billion over the next 10 years. The company said it's seen increased profits from investing in these parks, cruises, ships, and other attractions tied to its movies and characters. Disney said it's seen record growth in customer spending at the parks over the past 2 years and a significant decrease in the number of tickets it sells at a discount compared with before the pandemic. It's also gotten pretty expensive to go to those parks.
Gotten pretty expensive?
Yeah,
it's been expensive for a long time.
Very expensive.
Well, worth it. Had fun,
here's
but
a small
man.
cap. Rocket Lab, finishing the day lower today by 7.5%. It's a small satellite launch company. Overnight, about 3 a.m. New York time, launched from New Zealand. A failed mission. It led to a loss of its primary Electron rocket and the payloads that it was carrying into orbit. Shares were down as much as 15% earlier in the session, finishing it down by 7.5%, Romaine.
Let's take a quick look at yields here, because that was where a great deal of the price action was here on this day. You saw the entire curve, yield curve, shifting a little bit higher on the day, with the biggest activity in the 5-year and the 10-year space, each up about 6 to 7 basis points. In fact, right now you have a 2-year yield at the highest level since 2006, a 5-year yield at the highest level since 2007, and a 10-year yield also at the highest level since 2007 here. So that's what the market is staring into, and that's what the Fed is going to have to stare back into as it makes a decision tomorrow about what to telegraph to this market. Does it give them some sense here that mission is accomplished, or at least on its way being accomplished, or do they try to jawbone the market into believing that the Fed might still hike again?
There's no indication that they're going to say mission accomplished. I think everyone's learned the downside of doing just that. But if the message is higher for longer, that's what they've been saying for a while now. Why today is that resonating in a different way?
I don't know. You know what I keep thinking about? These yields at 2007, 2008 was a very different environment. I'm not saying that there aren't stresses today, but it's like I'm trying to make sense of the comparison. They're not the same situation. So what is it kind of behind it?
I just want to say to Scarlett, to try to answer her question, though, but a lot of this is kind of sort of being disconnected from the Fed. That a lot of folks we're talking to are saying that when you look at, we're looking at it from the yield perspective, but you have to kind of look at the flip side, which is the price perspective. And the idea that if economic conditions are deteriorating, like some people believe here, why would you want to hold 10-year duration or 20-year duration?
Right. You have no visibility into what's to come. And we know that inflation, the easy work's been done on inflation, right? The disinflation trend, most of it's been done at this point. It's going to be harder. The comparisons are a lot harder, too.
And some people would argue that it was no work at all, that a lot of sort of the downdraft in inflation had less to do with the Fed policy and more just to do with some of those, I guess, transitory issues that we all sort of laughed at.
So Powell's kind of right.
But there's a lot of things happening right now in the environment that Powell has no control over, and also indications that the labor market is still really strong. I was surprised to read in our write-up of the Amazon news with 250,000 employees being hired during the holiday shopping season. That's more than hired last year, more than hired back in 2019.
How much are they paying them, Tim?
$20.50 an hour.
Okay.
So, and it's still having trouble, the company's still having trouble attracting and retaining talent. So that's not indicating to me that there is a problem in the labor market to the extent that, that people are concerned about job losses. It's still hard to attract and retain talent in this environment.
Yeah, it's interesting. I keep having a lot of conversations with people who are like, I can't find enough workers. In the construction business and contracting, that is still a lot of stress points.
So that's kind of scary from an inflation perspective. I mean, the UAW is out there, making these demands for a 4-day work week and other demands too. Workers feel like they have power still.
I feel like I have power. I got my box back.
Yeah, Carol. I mean, she does. I mean, like I said, she just works half a day.
She showed up halfway through the
show.
show.
If only everyone could just get a box.
I mean, these 4 people on the screen, we know who has the real power here. It's, Barbie there on the far end of the screen.
Hey, listen, Barbie.
It's because of the Barbie pink. That's why.
You got pink there.
Don't Barbie's pretty powerful. Ken is the one who's
courses.
not so powerful. I'm just going to say. All right, guys.
I feel sorry for Ken.
Do you really?
Not really.
I think he
Okay,
feels
I
sorry
didn't
for
think so.
himself, too.
All right, guys, that's a wrap. We're going to see you guys tomorrow, and we'll have a Fed decision, which will be really exciting. All right, that's our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals, Beyond the Bell, and Countdown to the Close. We'll see you tomorrow.